Well, hello everyone, and welcome to Tuesday, May 28th mentorship webinar. Um, Not a lot to talk about today, so we're going to have plenty of time for questions. There are a couple things I want to go over today. I'm going to talk a little bit about buying stock. We want to take a look at our bull put spreads, which are doing very well. The weeklies only have one thing on GDX, and took that off this morning as it didn't move much at all. And we'll talk about some of our current positions, but let's take a look at the market. 162 points. It was up. It was up close to 200 points at one point during the day, but that's huge. It's huge, and this was. I thought maybe we were in the beginning of a little bit of a drawdown here. We had a down day there, then a doji here. Then this was pretty much a bearish engulfing pattern. Then we had another doji and another doji, and I thought maybe we were going to head on down for a little bit, and nope. That is not the case, as today the market opened around the world very strong. And but what are we sitting with? We're sitting with a bull put spread on the RUT, and the RUT is up 16 points today after having a big drop over before the weekend. And let me bring up the RUT chart, and so we gave back quite a bit during this drop, and then today for the bull put spread, which we got in where we sold the 890, bought the 880. That was I got in at 90 cents credit, and currently it's 20 cents. So that brings up a question, and I think David Crowner was talking a little bit about this last time, that a lot of the folks he listens to, they don't stick around going into the last week. Well, we've got a little bit more time left here. However, if it's worth 20 cents and we've taken 70 cents off the table, we take a look at the Analyze tab here. Here we are sitting right here. How much more is left? Well, we could get 90. We get $900, and we're sitting with 700. That's pretty awesome. That's pretty awesome. So at this point in time, we're into that area where it's kind of up to you. Kind of up to you whether or not you want to take this, or whether you want to stick around for a while. We're in good shape. We got plenty of room here, even after the big down day the other last week. We're sitting real good. I don't know that there's a big rush to jump out of it immediately. You can see we're sitting down here at 22 cents right now. 22 cents. Okay. So I kind of let that one up to you. We'll keep reviewing it. We'll keep talking about it. But anytime you wanna take your profit, that's what, close to 80% profit in this. Of what we could get, with the maximum was $900. So 7% in the month, and that's pretty sweet. That is pretty sweet. Let's take a look at Apple. And now, with the market being very strong today, there's only a couple issues that aren't real strong, and Apple's one of them, and that's okay. Apple has a tendency to go a little bit counter the market. I think when the market's a little bit weak, people flock to Apple. So today it's, it was up 5 points at one point in time. It's pulled back a little bit now, but if we take a look at Apple, we're still sitting pretty doggone sweet on this one. On Apple, we got into Apple at where we sold the 390 and bought the 380, and you can see, even though it started the day up here and then it's given some back, but it's still on the rise. It's still on the rise, and it's worth about 30 cents right now. If we look at the Analyze tab, move the ouch point down to here. You can see it's similar to the RUT, where it's we've gotten just about everything we can get out of there. Not everything, but it's one of those things that if you want to take your profits, now might be a good time to do it. Both these bull puts on Apple and RUT have worked very well this month. It seems like as one was real up a lot, the other one might be down a little bit, but all in all, they've been performing very well. So we'll let that be totally up to you as far as what you want to do. Now, I did go ahead and let me see if I can quickly find it. Yeah, I did go ahead and do a bearish strategy, just like the bull call. The bull put, I did one for bear call, and what I did is I used AAPL, Apple. And this was during a time where, if you, I think I started right here at this day here. That was November 7th last year. And if you would have said on November 7th, okay, I think we're bearish, I want to take on a bearish stance here, there's two things you can do. One, you could sell a put outright right here. Okay. The other is you could sell a bear call spread. A bear call spread, like the name says, you are selling calls, and that is a bearish strategy. So when you sell a bear call vertical, basically what you're doing is, at this point in time, what I did is I sold a 630. Let me see if I can make this a little bit bigger for you. The 630 was up around here. Okay, so at this point, we're selling something way up here, and then we're buying something further out of the money. And at that point in time, we got $1.25 credit, or $125. If you get 10 of them, the max credit is $1,250. Okay, so the two strategies we're going to look at is, one, we're going to just buy a straight December 600 put. And, Apple, now that it's got the minis, we could have done a mini, but here it would have been $5,030 to put on that position. Okay, down here I could have done that and put on the position and got a credit for $1,250. Now remember, that credit doesn't go into your bank account. That credit means that's the maximum. That's the maximum that you can obtain if it expires worthless. And every day it gets closer and closer to expiration, more and more of the premium reduces, unless you get like a nice little rise like we had here, and you'll see what effect it had. But it had less of an effect on the bear call spread than it would have on the straight put. Okay, let's go down to the next day, and that would have been 11/16, and that's right here. So for a while we've had, a definite drop here. So you would think that the put would be doing good, and the put at that point is worth 75.08. We bought it at 50.30, so we're up about 49%. Apple's pretty volatile, so not too many people can play this. Now that the minis are in, you can do that. But that little move right there, it was worth 49 cents, 49%. Okay, let's take a look at the vertical. The vertical, the 630 put was worth $5.08, and the premium has dropped out of there like crazy. Well, the premium on the one that we bought has dropped out like crazy. So you can see if you were selling this naked, this can be extremely profitable. However, the margins required to sell something naked, first of all, you have to be at the highest level of a trader, as estimated by the trading platform that you're on, and that's usually the number of years experience you have in option trading and how many different strategies you've been involved in. One thing I might mention that is because you're one of my mentees, you should never be questioned as far as not putting on a trade, because you're using my years of experience, and that's 30 plus. In 30 plus years of experience, they will allow you to do anything you want. As long as you have enough margin, they'll even allow you to sell naked. Don't do it. Don't do it. I mean, this looks really attractive, but it's always good to have to buy one further out of the money. But at this point in time, back up here we had a $1.25 credit. At this point in time, that $1.25 had gone to 42. Okay, now remember, this is you got to think in reverse here. That's actually good, because the $1.25 that we could ultimately get now is only worth 42. So if you were to buy that back, you would buy it back for 42 cents. You sold it for $1.25. Okay, so you're going to get the difference. You're going to get the difference. You sold it for the $1.25. You're buying it back for the 42, so you're going to get the difference, or plus $830, or plus 9%. Well, at this point in time, you say, "Wow, I'd rather be just buying a put." Well, that's okay. However, it's all about risk and reward. So let's go a little bit fast forward. Everything was all going really good here, but now all of a sudden, whoa, boom, 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 up it goes. So what's happening when it gets up around here? Okay, that December 600 put now is only worth $23.38. So you are now in the negative 54%. Okay, what's happening to the bull put? Well, you can see that it's gone up in value from what it was. It was down to $1.81 for the 630 put. Now it's gone back up. But see the one that we bought also is going back up. So you've only got $1.52 credit. Okay, you sold for $1.25. You bought, if you would buy back right here, you'd buy back for $1.52, or you would now be minus 27 cents, or minus $270, or you'd be down by 3%. Okay, that's probably better to deal with than this. So, like I said, you got pros and cons. The pros of the bear call are that you can hang with it a little bit longer. If you see a down move, you can go in and you're going to make money if it goes down, stays sideways, or comes up just a little bit. Here in this one, it's up a little bit from where you sold. Okay, but if it stays at this level until expiration, this will grow to $1.25. Okay, now let's go all the way down here to the bottom, and you can see that the strategy, it was a bearish strategy, and the put should be working just fine at this point, and indeed it's back up to the 56%. Where are we in the vertical 1 day from expiration? It basically has expired, worthless. Okay, we sold the 630 and bought so 630. Yeah, this should be just the opposite. This I'm wondering, because you know what we're doing is we're the further one out is the 630. The near term is the 620. But in this case, we got $1.25, and now it has expired, worthless. So now that full $1.25 has come into our piggy bank, and now we've got a comparison here of a wild ride versus a pretty steady ride on the bear call spread. Both strategies, one less risky, one less return. Okay, less risky, less return. The other with the straight put, more risky, more return. Both the same strategies. Bull put and bear call are two vertical strategies that you can use rather than doing just the straight calls and puts. And that's what I like to do with our theta trades. And I like to look at the RUT because it doesn't gap. It has beautiful premiums way out of the money. So does Apple. So does Apple. And you know, I love to do theta trades on Apple, except for right around earnings, because you never do know what's going to happen right around earnings. Okay, so I will make the correction up here and send this out to everybody this afternoon. Like I said, you can always take a look at this thing and you know, keep it in your notebook and say, well, I forget what that was. Bring this out, go through the example, and make sure that you've got this strategy down pat. Okay? All righty. Good deal. Let us go ahead. Any questions on that before I go ahead? Any questions at all on the bear call before I go ahead here? Alrighty, good deal. Let me go ahead and take a look at our weekly options. And let's see here we go. Let's see, can we make money when GDX is doing this? No, this is actually not very good. Now I could have probably got out down here, let it ride up to here and got out and saved a little bit here, but I was in here before the weekend, and you know, it let me bring up what I've got here. Okay, I got out this morning at 11 o'clock as it came down here, and then right around 11 o'clock, it was starting to move up, and I could just see my money flying out the window, and I said, put up the white flag and said, I'm done. I'm done. You know, I got in Thursday right around here, actually it was right around 11 o'clock when it was squeezing. Got in right around here, and take a look at that. You know, and somebody asked me if we could put on some Fibonacci's and maybe project out what was going on. And at that point in time, I said, I don't know. I don't see. I don't see what we could do there. Well, then on Friday, it came down here and made a measured move. It made a measured move right here, and then it came back up. And then it made another measured move. So absolutely, at this point in time, you could definitely put on a Fibonacci, and you know, you could have gone from here to here and back up, or from here to here and back up. I'm going to do both of them and show you that they should be pretty close to one another as far as where are some of the major points. And you can see this guy came down almost to the 127, and then up it went. And that's a pretty big measured move. Pretty big measured move. So, you know, I probably could have gotten out right here. But at that point in time, we were down like 40%. And in my mind, I was thinking, okay, I'm going to let this thing go because I'd love to see it come down here. It comes down here. Now we got a whole different ball game. Okay. So my thinking as I was watching this was, I really would like to see it come down here. And if it doesn't, I got to jump out. Okay. Let's go ahead and put on a fib here from right here to here and then back up. Okay. Notice that the 161 of this guy came down and hit that. And then the 127, it's a lower number. So I look at the 127 and the 161 at this point in time. Like I said, it hadn't made any money. Well, I could have done a couple things I didn't do either, so oh well. I could have said I'm going to get out of the put side at this point and look for a little retracement. Well, that's making it too precise. And doggone it, you know, this strategy is profitable, and you don't have to be that precise. So let me get rid of this for a second, all these graphs, because and let me bring this thing up. So I didn't do that, but I did see it coming back up here, and right around 11 o'clock, we had the 27 put. Okay, so this is why I was thinking, you know, here we are at 27. If it comes down where we're in the money, we get in the money, we got a whole different ball game. Came down here to 27, went up we go. Well, now we got to have it go all the way to 29. And you know, like I said, money is flying out the door. I got out right here. That's it. 56% lost. Oh well. This is one of those that just did not work for us, and this happens. Now, there's one thing that I have noticed, and I don't know if it's a for real phenomenon or what, and I'm going to have to go back and study this. But it just seems to me that when we lost about 59% on GDX last week, and then we came back and did the same thing towards the end of this week, and it's when it gets in this long squeeze, you can see that it was squeeze and squeeze and squeeze. I would say there's the squeeze right there. There is the squeeze right there. That you know, sometimes these things down here can be a little confusing, and but one thing it does, I think, lend itself to is maybe this is not the best time to be into this strategy. You know, if you see something like this going on, and then when I jump back in it, that was like, well, you shouldn't have been in it back here, and then you jump back in it, and shame on you. So I'm going to do some studying on this because and I tend to every once in a while get away from this and come down here. It's so much easier. But, really, if you look at this, there is the squeeze. There's the squeeze right there. It's not here. It's not here. So, I would behoove you all to really spend some time and just concentrate on the Bollinger Bands. The Bollinger Bands, I think a lot of times will give you a true reading, whereas the red dots here sometimes, might confuse the issue a little bit. In any event, we are out of GDX, and we'll see what happens. We're out of GDX. FAS. FAS, a lot of people, sent me emails and they said, hey, I got into FAS. And my response was, well, let's see how it does. And there was the squeeze. Once again, I didn't see too much of a squeeze here, but this again was on the Friday, 12 o'clock, 11 o'clock on the Friday before the long weekend. In my mind, I already had a position going into the long weekend, and I said, I'm not going to take that. Okay. So I didn't take that. Well, let's go back here and let's look at, I don't know that we can do that, but we could, let's see, what could we do? Well, we really can't go back. We could bring up the options and see what the option price was. But, and actually, why don't I go ahead and do that? Let's just look at the call side of this guy. Let's look at the call side of this. And let's see, here we are, May 5. And so, somebody asked me a question one time, what does May 5 mean? That's the 5th week of May. 5th week of May, that's all that is. And the 66, let's see, let's look at, if we left click on that, we can add it to our watch list. Okay, let's add it to the watch list. And we got it down here. Let's go back to our chart and see if we would have on Friday right around 11 o'clock. Let's buy a call Friday at 11 o'clock. Friday, 11 o'clock. This is the purple line is the theoretical value. That's, again, the value that's calculated using the Black-Scholes equation. These are at actual values down here. So Friday, about 11 o'clock, you could have picked up that call for about $1.53. About $1.53. And it went all the way up to 474. Pretty nice little move, eh? All right. What have we gotten out at that point? Well, let's take a peek at this. Let's take a peek. One, let me pan this a little bit. Okay. One, it came down and made a double bottom. You see the double bottom? Okay. Not exactly. Not exactly. Okay. It was off by a little bit, but that is, in a 5-minute chart, that is a double bottom. Okay. Most definitely. So if you're watching this really close, you got a double bottom. And then it comes up, but it doesn't make it doesn't confirm the double bottom till we're into the weekend. Okay, but once we get into the weekend and it opens this morning, you say that double bottom is confirmed. Wonder how far we're going to go. Well, I can put on a Fibonacci retracement on a double bottom from the top of the W, if you will, down to here, and bingo, even before the market opened, it was at 161, and it went up to here. You know, if it was at the 161, and then you look at this thing and you say, okay, I'm either out right here, or I'm going to do that the Jim Fay follow the trailing stop. Okay, I'm going to get out here, I'm going to get out here, I'm going to get out here, and I did. I got out right about here. Okay, so that's 474. Let me get out my calculator quick. Minus 153 divided by 153. That's only 200%. 200%. 200%, and we could have, you could have pinpointed that. You absolutely could have pinpointed that. Okay, we had a double bottom formation, and you know, it was to the 161.8 first thing, and you say, well, I've got 200% in here. Do I think it's going to go to the 261? Yeah, you know, if it does, you know, that's huge. But in the meantime, I'm going to just follow this, and when it gets stopped out, I'm going to get stopped out or get out right here. You could have done that. You could have done that. And I'm kicking myself a little bit because I didn't do it. But like I said, I already had so I had two horses to choose from. One I was already in. I was already in back here with GDX back on Thursday. Well, actually, yeah, back in here. So I already had a horse in the race. And then another horse came up and said, I'm ready to run too. And I already had my money on one. And I knew that it was a long vacation or a long holiday. I knew that theta was going to be in play. And invariably, the psychology of trading kicks in, and I picked the wrong horse. I'm okay with that. I'm okay with that. I mean, you know, what? I had no clue. I had no clue that the market was going to be so strong today, and that FAS would be so strong today. So really, when it started doing its little squeeze here on Friday, you know, I kind of looked at that and said, yeah, I don't really see a huge squeeze here, and you know, that this might go up, and if it goes up here, I can go with a call and a call only. It just required too much brain power, and I already had one position, and that's the way I'm going to leave it. Okay, but I did want to show you this because that's the power of this strategy. I mean, it happens. It happens. And this just happened to happen on one while I was on the other. Oh well, that's the way it goes. Let's just take a peek at EEM. EEM also did the same thing as GDX did for a while, and it just sat there and squeeze, no squeeze, and then finally, bam! That was a huge move in EEM. A huge move in EEM, but I didn't take it because, like I said, I gotta study what's going on during these periods. I think it's telling us to stay out. Some people say, well, why don't you sell premium on that? Okay, you could, I guess. TLT, same thing. So actually, Dale, there were potentially 3 horses in this race. And which one did you pick? The one that lost. Oh, well, yeah, that happens. Let's go up here and see if we can put on a fib extension on here. Let's see. Keep down here. Here is probably the most dominant measured move. So the low numbers are really going to be, let's go all the way up here. And, right around here is a definite get out of there. And that was a very nice move in TLT. Okay. So, how do I summarize this? The weeklies are very powerful. Do you have to take all of them? No. I chose to not take them all because of the long weekend. 2 out of 3 made money, and the one I had didn't. And guess what? I closed the trade out, and I'm moving on. And that's the way I'm playing that one. Okay? So currently we have nothing going on any of these. We're just keeping an eye on them. Okay. Let me stop here for a second and see if we got any questions on the weeklies, any comments. Anybody have any that they would like to share before I go into some of our current positions? Right below your list of attendees, you'll see a little hand there. All you have to do is click that hand, and your hand will come up, and you can go ahead and ask a question. Bob, I see your hand is up. Let me unmute you here for a second. Bob, how you doing?
I'm doing fine, Dale.
I know you had the FAS because I know you're bullish on the FAS.
Believe it or not, I was sort of like you. I didn't like going in over the weekend.
Okay.
So I didn't have anything on this weekend. I did get on this morning using a straddle, or I mean a strangle for this coming week.
Okay.
So I'm just going to see if anything's happened there. But I just wanted to let you and the attendees know that to set up your own squeeze, all you have to do is add Keltner channels to your view.
Yes.
And when the Bollinger Bands are inside the Keltner channels, that's the beginning of your squeeze.
Yep.
And when they break out, it's the end.
Okay, let me bring those up real quick. There they are. You just does John Cutter just use the default on that, Bob? Do you know?
I believe. I don't really know exactly what John uses. I've been using the Keltner channels for even before I used the Bollinger Bands.
Okay.
But they're sort of the same as the Bollinger Bands.
Yeah, let me blow this up a little bit. You can see what Bob's talking about here. The Keltner channels, I've got them in red and purple. You can see they come along and they more closely parallel the moving average, but occasionally the Bollinger Bands will go inside them, and when they go inside them, that's when he gets the three dotted squeeze. It's interesting because I just look at the squeeze basically, and when you look at the Keltner channels, they run pretty. Well, look at the distance here. It's maybe a little more narrow than here, but when you get that squeeze in there, and that makes sense that it would. The squeeze on the Bollinger Bands would bring it inside the Keltner channels. Thanks, Bob. I appreciate that. I just believe that we got too many lines going on up here, and I look at that and say, well, which line am I looking for? I just like the Bollinger Bands. That's all I like. So let me just get rid of that here for a sec. There you go. Okay, good, excellent. Any other questions, comments on the weeklies? Anybody have any? Anybody want to share anything? Looks like everybody's pretty coming back off the holidays. Everybody is very, very shy today. Okay. Okay, we're going to go into some of our current positions, and then we'll have plenty of time. So if you do have any questions, please feel free to bring it up. I think it was Bob that brought up our the DFS, the Discovery, and how it's just going right up the regression channel, and it indeed is. It started out stronger today. It's kind of given back a little bit today, but yeah, and DFS we're doing okay on. Coca-Cola's going a little bit against us today, but good grief, the market's up a bunch. But you can see how it's pulled back here a little bit. And the other one that we have is Verizon. Verizon was going back, and it's pulled back too. So I like the puts in Verizon. I like to put in Coca-Cola. PepsiCo. PepsiCo is the only red on the board here. It's the only red on the board. So let's see if we indeed got in yet. No, we probably have not. We probably have not, because I wanted to see it down around the 81.70. So I'm probably not in at this point. And I'm still going to hold that and keep it right around 81.70. I think a put in PepsiCo is good, but we'll just hold on to that. Let me go over to the monitor tab real quick. Here's my conditional order on PepsiCo. If I just go ahead over to the gear, you can see that I had it at or below 81.71. 81.71. Now, I had that day and day only. Okay. 81.71, I still kind of like that 81.71 price. Might bring it up just a little bit. 81.78, let's call it. Okay, let's go in. All you have to do now is just go in and right click on that, cancel and replace. I'm going to come over here, and it's got the conditional order the way I have it. I'm going to make this a little bit higher. And I'm going to say good till canceled. Because I think a put on PepsiCo is the play. Okay? And you just say okay, confirm, and you're basically resending that. And you'll see on the monitor tab here that now we have the order in to buy an 87.5 put, waiting for the conditions, and it is good till canceled. Okay, so that's where we're sitting. We've got on the board here on the monitor tab, you can see we've got our Apple bull put. And this is where it was when we bought it. This is where it is now. And that theta decay, this is a prime example of how the theta works. That we sold the 390 put for $1.79, and it's now worth 76 cents. Okay, so if you would have sold naked, you'd be up $1.03, which is pretty awesome. And that's too scary for me, so I always want to buy one further out of the money. But notice how the one further out of the money doesn't decay as quickly. Okay, it still drops off. That's theta decay there, but not as much. So you made more money here than you made here, and that's basically the crux of the bull put spread and how these theta trades work. Okay, we just got making a little money on DFS. We're all right on KO. We haven't gotten filled yet on PepsiCo. We're doing very well on the RUT and down just a smidge on Verizon. Okay, so somebody sent an email in, and it was a great question, and that question was, I'm going to be going on vacation. I'm going to be going on vacation soon. What would you suggest that I do? Okay. Depending on how long it is before you go on vacation, one, I wouldn't put on any new trades. Okay, so that's one thing. No new trades. Second thing, I would just go down through here and I would say, okay, how am I doing on AAPL? Well, I've done quite well on AAPL, and I'm going to go on vacation and worry about it to capture just a little bit of profit. This is a low return, huge risk. I'm going on vacation. I'm out. All right, that takes care of one of them. Let's go down here to the RUT. Same thing. I'm going on vacation. Little bit of return for a lot of risk. I'm out. Okay, so you sold two of them. Okay, so now you look at this and you say, okay, I've got DFS and I haven't been in there very long. Let me take a look at what I've got there. I want to put a stop loss on this, and I want it pretty tight. And I'm either going to go right here or right here with my stop loss. So I'm minimizing the chance of loss there by putting on a very tight stop loss. And now I can go on vacation knowing that I'm okay with it if it comes down here and gets stopped out. I'm okay with that. Okay, let me look at Coca-Cola. Coca-Cola, that's pretty easy to do too because I have a put on here, and I'm going a couple ticks above the previous high, and there's my stop. Done deal. Okay, and I'm okay if it comes up here and gets stopped. So you have to be okay with where you're putting the stop, realizing that when you're on vacation, you might get stopped out. Okay, the other one is Verizon. Take a look at Verizon, and here I might, rather than going back to the previous high, I might go to this area here. Maybe even coming down to this point here. It all depends on how again, how aggressive you want to be as far as trimming your losses. If you're okay here, I'm okay with that. And the same thing is true with DFS again. You might say, okay, this is maybe too tight. I'd rather be down around here. totally up to you. But that's exactly what I would do. Okay, so now you look at that and you say, well, I'm out of Apple, I'm out of RUT, and I've got pretty good stops on my positions. I am not going to get into PepsiCo, and even if I lost all these, I'm okay with that. So I'm going to go enjoy myself, and that's the way to prepare for your vacation. That is the way to prepare for your vacation. All right. Okay, one other thing I want to talk about today, and that's I want to kind of, because I've had a lot of people talking to me lately about where do I go from here? I'm doing pretty good, and I'm building up my portfolio. Where do I go from here? And my suggestion is not to continue with a large portion of your portfolio in some of the higher risk elements. So what I do personally is a large portion of my portfolio, and lately it's been approaching 80%, a large portion of my portfolio is in stock. Okay? And if I'm not in stock, I'm in cash. Okay, and with 7 to 80% in here, you gotta know what your portfolio size is. You know how many financially strong stocks you have. You know how much you can invest in each one of these, and you're probably not invested in all these at the same time. So you probably have a portion of this, and I don't show this, in cash, and that's okay. That's okay. I'm hardly ever 100%. As a matter of fact, I can't remember that I've ever been 100% invested. I just think there's no reason for that. It's always good to just have cash sitting on the side. An opportunity might come up, whatever. But, the majority of it I think should be on stock. And you say, well, how should I trade that? You can't beat the regression channels for trading stock. You can't beat the regression channels. You just buy when it's low, and you get out when it's high. And it might go higher, but that's okay. And it might go lower, and that's okay. And when it turns around, you get back in. But you're not jumping in and out, in and out, in and out. Okay. A little bit is on the option trades. A little bit is on theta, and then the weeklies kind of sit over here. Now, this is kind of counter to we heard an interview by Karen the Super Trader, and if those of you that haven't heard that, it was in last month, and if you want me to give you access to that, I'd be glad to. But Karen the Super Trader trades millions, 150, $200 million using theta trades and theta trades only. Wow. And she sells naked. That's a heck of a lot of risk as far as I'm concerned, where, I sleep like a baby because I am very risk adverse. And if something goes on down here, I'm not worried about it at all. And today, with GDX, we were down 50%. And rather than second guess myself, it was very easy for me to get out. Just get out. The portion that I lost on GDX was such a small portion that the decision process is so easy. Get out. There'll be another day. Okay? But I just wanted to bring this to everybody's attention again, and realize that, yeah, the returns up here are not as great, but that's okay. When you got a lot of money, you don't have to make big returns to do very, very well. Okay? When you've got a small portfolio and you're trying to make it grow, yeah, I'm okay with this stuff, and I'm okay with maybe being more risky than you are. But for some of you that have, a big retirement nest egg, or you've done very well in the stock market, this is what I would recommend. No, can't recommend. Sorry. This is what I do. How's that? I got most of it in stock, small portion in options and theta, and weeklies are just I kind of do those. It keeps me sharp. The weeklies keep me sharp, and that's why I love theta. If I were to look at this, this is where I make my money, but this is so easy that I love theta, and I love the weeklies. Theta is just it just kind of clicks along. And I love that. I love that. Weeklies, I love the weeklies because it keeps me sharp. And today is a good example of that. When we were looking at FAS and looking at the double bottom and getting out with a huge gain, and the weeklies have everything. They have the fibs. You can put the fibs on. They have double tops and double bottoms. They have they've got you can use the Williams percent R on there. You can see trends. You can see consolidation. You can see, the weeklies just, if you don't do anything, trade the weeklies. It will bring you into focus and what you have to do and what's really important in the market. And you don't have to be real precise, but it's there. It's there for you. Okay? Okay, I do have time for one more question. If anybody would like to ask me a question. Okay, that looks like that's it for today. We don't have any trades on in the weekly. Have no events this week, so we're all okay. So we'll come back on Thursday and have some more fun. Bye-bye, everybody.